Now, Lizanne, I'll come to you first of all, and your snapshot takeaway on this roller coaster week that we've had, down and now resoundingly up again.
So what was interesting is coming into this, if you looked at positioning in the options market, particularly retail investors, there was actually a bit of prep that had been done for some sort of pullback. And then as they've proven to do pretty consistently in the past year, bought the dip in earnest on Tuesday. And that's the reason why I think we've had the rebound that we've had. I think a lot of folks have also watched the 50-day moving average, and Monday's swooned down, took us below that, further below than we've hit before. And now we're back above that. So I think the technical picture is improved too. But I wouldn't be surprised to see continued swings like this, not to mention that there's still a lot of churn and rotation under the surface.
I just want to point out what happened with bonds today. The 10-year Treasury note yield 142. So we saw a lot of selling in treasuries, Lizanne. Are you surprised the broader market held up, especially the pockets of the market like technology? Nasdaq finished higher by more than 1%. I mean, last time we saw these yields move like this, technology got hit.
It did, but that was into the late March period where you had the move from 50 basis points last summer to almost 175 on the 10-year. And that was a bit of a surprise at the time. So you had that re-rating that occurred in the longer duration, higher valuation segments of the market, including a 10% correction in the Nasdaq. So I think a 10 basis point move up may not be enough to ruffle some feathers, but I think if we continue to see a march higher in yields, at least you're likely to see another rotation away from some of those longer duration, higher valuation segments.
Let's touch on some of those potential beneficiaries from yields. Steph, banks actually really topped out back in June, despite very strong year-to-date numbers still. Do you think this latest jump in yields could be a catalyst for them? I mean, it was today, but a meaningful catalyst over months, not just days.
Oh, absolutely. And I think that one of the reasons that Bank of America outperformed the group for most of the group today is because it's the most interest rate sensitive bank. And it has lagged because rates have been kind of stubbornly low. Right. So now that they're inching higher, I think that's actually very good news. In the meantime, that stock, I've been adding to that one, actually. It trades at 1.4 times book, right? It yields about 2%. And they're buying back $25 billion worth of stock. Morgan Stanley's buying $12 billion worth of stock, a little less rate sensitive. But they got the E-Trade piece there, and I think that will help on the rate side. And I still like American Express very much for the reopen. And you know Wells Fargo is one of my largest positions just on the restructuring, and that's acted very well as well. So I'm overweight. I'm 600 basis points overweight financials, guys. It's not been pretty over the last couple of months, but last couple of days really nice.